So President Trump wants to lower interest rates.
We will drive down the rates so you will be able to pay 2% again, and we will be able to finance or refinance.
But one man stands in the way, Jerome Powell, the chairman of the Fed.
He's making a mistake by not lowering interest rates, and I think as well as we're doing, we'd do much better. He's keeping rates too high.
He's refusing to drop rates, so Trump wants him gone.
The president said Powell's termination cannot come fast enough. That's Jerome Powell, and told this to reporters.
I don't think he's doing the job. He's too late, always too late, a little slow.
If Trump gets his way, it will break the entire system, setting America back decades.
If I want him out, he'll be out of there real fast, believe me.
Let me explain why this is so important to you and me. Then I'll tell you what I'm doing to capitalize on this internal power struggle. By the way, if you're new here, my name's Andy Coleman. I've made millions of dollars in the real estate market, but lately I've been shifting my focus to the economy. Currently, the national debt is growing faster than our GDP, which stands for gross domestic product. It's just a fancy way of saying how much money our country is producing. To put it in simple terms, the US is spending more money than they're currently making. It's a big reason why Trump started this crazy tariff policy and trade war with China. He wants to bring production back home, so America essentially makes more money. But another solution is to refinance our national debt, because $9 trillion is coming due this year. But to do that, the US needs lower interest rates. That's why Trump is putting so much pressure on Fed Chairman Jerome Powell. He wants to drop the rates back down to 0%. Trump also believes that lower interest rates is going to stimulate spending in the housing market. I'm going to argue right now that the housing market is in such bad shape, the average American can't even dream to afford buying a home anymore. You're basically being forced to rent because of what the US did back in 2020. In reality, lowering the interest rates would be devastating for the economy. That's why Jerome Powell is refusing to do it. Before I really get into this, I want to know, whose side are you on? Trump or Powell? Because I have a funny feeling you might think differently after this video. So let's break down who we're even talking about here for those that don't know. On one hand, we have Jerome Powell, who served as chairman of the Fed for the last 7 years. If you want to know what that means, think of him as Mr. Monopoly. The Fed chair is the face of the central bank, essentially the leader of the US monetary system. But most importantly, he has 26 years of high-level federal experience, dating all the way back to President George Bush in the 90s. Now, on the other hand, we have President Donald J. Trump. Hate him or love him, he's who we voted for. He's been a controversial public figure for decades. He's often looked at as unpredictable and volatile, to say the least. Some might say a criminal that has bankrupted the last 6 companies he's owned. Not me though. If you want to know my opinion, I like them both. The question is, why is he doing this? The president has a tremendous amount of power that he's ready to exercise on Jerome Powell. So you're probably thinking, if Trump really wants the Fed chairman gone, can he just fire him? Well, no, he can't. Under the Federal Reserve Act, the chair's 4-year term can only be cut short for cause, meaning serious misconduct. Courts have never ruled that a president may fire a Fed chair over an interest rate disagreement. So an attempt at removing him would face tremendous legal backlash. But there's a few workarounds that Trump can do, such as moving Powell to a new position by essentially demoting him. To my knowledge, this has never been done before, but in theory, it's possible. If that happens, Trump can replace him with anyone that he chooses. Now, I know you might be thinking, what's so bad about lowering interest rates? Isn't borrowing money for cheaper better for all of us? Well, no, it's not. At least not yet. The economy is still in recovery mode from the pandemic. A sudden drop in rates, like we did back in 2020, will cause short-lived relief only. Dropping the interest rates to 0% fixed things for a little while, but it's the central cause of what has the US heading into another great recession. You can't make money essentially free to borrow without having serious future consequences. That fix was only a temporary band-aid. Think of it like this. You're in your garage working on a project, then all of a sudden you cut yourself on a piece of glass. You should go to the hospital to get stitches, but you say, nah, I'm just gonna put a band-aid over it. Think of lower rates as a temporary band-aid, but for the economy. Instead of going after the root of the problem, which in this case would be the enormous gash that you need stitches on, You're just putting a band-aid over. All it's doing is delaying the inevitable. Eventually, it's gonna fall off. That's exactly what happened back in 2020. But instead of a giant gash, the country faced a global pandemic. Like I said, the Fed dropped the rates to 0% to save the economy. It did work. It sent everything into overdrive. The stock market exploded, the housing market reached all-time highs, employment rates went back up, but the highs didn't last long before everything started to come crumbling down. Now, Trump thinks that we need another temporary fix, hence why he wants to lower the rates back down to 0%. Jerome Powell, on the other hand, learned his lesson back in 2020. He does not want to do this again. Let's go back to 2022. Just 2 years after the 0% interest rate drop, inflation hit 9.1%, the highest on record since the 1980s. Jobs growth slowed, and the thought of buying a house for your everyday American became unobtainable. The common belief is lower interest rates are a good thing. Your auto loans are going to be less expensive, your mortgage payments will be cheaper, you could even refinance your debt. It's basically just going to pump more money into the economy. Normally, yes, this would be very good, but in the circumstance that we're in, not so good. There's two main reasons why. Number one, and probably the most important, is the housing market. What's the number one reason why the average person can't afford a house right now? Is it the mortgage rates? No, it's not. It's the price of homes. Let me explain why. The average home cost in America has more than doubled in the last 5 years. That means a house that used to cost $350,000 back in 2019 now cost an astounding $700,000. Normally, this does happen over time, but not this fast. Houses are only supposed to appreciate in value by 5% per year. So using this metric, it should have taken around 20 years for a house to double in value. We're currently in uncharted territory. Lowering interest rates would reduce your monthly home mortgage payment by a few $100. But what would it also do? It would trigger millions of buyers to enter the housing market, taking up all the remaining inventory. Enter supply and demand. We all learned this back in grade school. If supply is low, but demand is high, what happens to prices? They go up. This is not rocket science. That's why I'm very surprised that President Trump is calling for lower rates considering everything that's happening. Eventually, yes, we need interest rates to come down again to make it affordable to buy a home. But we haven't had enough time to recover from the first housing market boom back in 2020. Jerome Powell knows this. There would have to be another great catastrophe for him to reduce the rates just like he did during the pandemic. That's exactly what Trump wants. A mass panic. He's trying to put a lot of pressure on the Fed to lower the interest rates, but so far it hasn't worked. The way I see it, we need about 2 more years of these higher interest rates to stabilize the market. Think about it. If rates remain high, people are going to stop spending money. When people stop buying homes, the supply starts to rise. Low demand equals high supply, which then reduces the prices. That's what we're currently experiencing as I speak. Supply is going up, so prices are naturally coming down. The problem is, if you look at the numbers, we're still about 60% overvalued to where we should be. So lower rates makes no sense at all. I've been urging everyone to stop buying homes, or at the very least, offer way under asking price. I want you to lowball the hell out of these delusional sellers that think they're sitting on gold. They're not anymore. So you don't need to pay what they're asking. So let me explain how the value of homes are set. It's based on previous house sales. So all the seller needs is just one house in their neighborhood to sell for an astronomical price. Then they're gonna have the courage to list their home at or above that price. So as an example, if they see one of their neighbors' houses sell for, let's say, $700,000, they also think they can get that much or more, even if their house isn't worth it, because now they have a comparable to justify it. So I want you all to tell your friends and your family to join this housing strike movement. That's why I firmly believe in what Jerome Powell is doing. He's actually sticking up for us, the little guys. Okay, remember how I said the housing situation was only one of the problems? The next biggest problem with lower interest rates is inflation. This really affects you and me. The cost of our eggs are gonna go up, our gas prices go up, services go up, you name it, everything costs more. But do you think your boss is gonna pay you more to compensate? No, absolutely not. Meaning your money is now worth less. Hence the word worthless. I don't know about you, but I don't want my money to be worth less than it is today. Personally, I would rather the interest rates stay high for a little bit longer so it drives inflation down. Because if less people are borrowing money, then they're not going to spend as much. So if there's less of it in the US money supply, the dollar now becomes more valuable. Because remember what happened when the Fed raised the interest rates 11 times back in 2022. Inflation shrunk from 9.1% all the way down to 2.4%. President Trump wants to screw it up for everyone. This is just another reason why Jerome Powell refused to lower the rates, because the second he does, inflation is going to go back up again. He believes that the economy is in a good position right now. Lower rates also mean the stock market will typically go up as well. But is that really a good thing? I don't think it is. So let me explain. We just saw that the stock market plummeted a few weeks ago, down 10% from its all-time high, all due to Trump's crazy tariff policies. But that was actually great. You basically got the opportunity to invest at a discount. Unfortunately, that didn't last long because he backtracked very quick, rolling back the tariffs almost as fast as he announced them. As I mentioned before, Trump is very unpredictable. Our housing market is finally starting to correct itself. Inflation is dropping. These are all incredible things. It's exactly why Jerome Powell is not giving in to Trump's demands. Let's just hope he sticks around long enough to see this recovery through, since unfortunately his term is up in 2026. That's when things will get really interesting because Trump is certainly going to appoint a new Fed chair. But until then, here's what I recommend you do. We all know timing the stock market is foolish. So dollar cost average. Take a little bit of money out of every paycheck so you can invest every couple weeks. I'm investing in VTI and VOO, which is essentially Vanguard's way of tracking the S&P 500. It's very safe and very stable. Typically, it yields a little over 10% return every year. Then, if you want to buy a house, you have two options. One is to wait, so we let the inventory pile back up again, which is going to gradually drop the prices. Or if you want to buy a house right now, you can. Just make sure you're putting in very low offers. The two safest investments that you can make is the S&P 500 and buying a house. In my mind, we're in such a good position to capitalize on both because you know what the great Warren Buffett always says: be greedy when others are fearful.